Let's bring in Alan Boomer, Chief Investment Officer at Momentum Advisors. Alan, always good to see you. So you're not getting rid of tech now. Why not? There's so many people running from it.
Great question. I mean, first of all, you have to ask yourself, where are we in this cycle? We've already had a number of really aggressive rate hikes. Inflation is still a problem, yes. But whether the Fed hikes by 75 basis points next month or 50 basis points next month, the majority of the pain is gone in terms of what the Fed is planning to do. Maybe we get another point to a point and a quarter in the future. And so we've got to start really thinking about what's going to happen after the Fed is done. The Fed will be done at some point. The futures market's already pricing in, and stubbornly for the Fed, the futures market's pricing in rate cuts next year. Powell's not willing to say that yet. He's got to be hawkish in his tone. But again, we know this can't continue on forever, and we've got to be thinking about what happens next.
Well, I mean, but really the market seems to be starting to believe him. It's like maybe Dad's really not going to take us for ice cream this time, right? In the past, and I know you're looking at what tends to happen after the Fed is finished hiking, in the past, they've cut, right? But so if you look at the data, probably everything that's happened with stocks shows that reaction to cut. But he's saying we're not going to cut this time. We're going to keep rates where they are. Can you look at the historical data in the same way?
Yeah, you really have to just think about, again, the Fed has very few tools in order to, accomplish what it wants to accomplish. They've got jawboning. That's what you're hearing today. The Fed being very hawkish in its tone. They've got the ability to raise interest rates. They've got quantitative easing and tightening. And then they've got the pace at which they do these things. They are operating with very blunt instruments. Imagine trying to give yourself, heart surgery, but you're using a shovel. I mean, so you've got to be really hawkish. You've got to talk really, really big. And so, again, the market also prices in what we think is going to happen. And the Fed futures are not pricing in, rates going to 7%. They're really pricing in, again, interest rates on the short end getting higher by maybe a point to a point and a half, point and a quarter higher. And then we start to see a retreat next year. So the Fed can't say that right now, though.
Shepard Smith here. Thanks for watching CNBC on YouTube.